Hi there. There's been two very recent exciting game-changer announcements that is affecting the application of real-world assets tokenization in the mainstream that I honestly think you ought to know about. And between them are not just merely transforming industries, but also presenting massive opportunities for blockchain investors. So let's jump into the details next. Okay, so this is the article that I was referring to as one of the two exciting projects that's hitting within the real world assets industry. The first of which is to do with tokenizing funds. So Circle, who is the company behind the USDC stablecoin, which is an example of a fiat-backed stablecoin that is pegged to the US dollar, is actually second place to Tether, which is its main competitor. Tether is the largest US stablecoin, a US pegged stablecoin in the markets today, and Circle with USDC is in second position. Now, this announcement from Circle to enter into the funds tokenization race by this recent acquisition of Hashnote, which is a 1.3 billion real world asset issuer of tokenized funds, is very, very interesting. I honestly think this is going to be very, very pivotal in bringing yet again the real world assets tokenization into the mainstream. Now, not only that, they've also made an announcement that they're going to bring their 48 billion USDC stablecoin to the Canton network, and more importantly, they struck a deal with a crypto market maker called Cumberland, DRW, to provide liquidity for USDC and USYC tokens, which is the actual tokenized fund issuer from Hashnote. Now, these announcements is bringing together the synergy between stablecoins and tokenization, because as we recall, stablecoins are like the main gateway entry into bringing fiat money into the digital assets realm. That is what stablecoins are mostly used for, and also for day-to-day transaction settlements, and more importantly for cross-border payments to bring down the cost of those transfers close to 0% fees. If you compare that with the traditional finance arena, like the likes of Visa or MasterCard or even bank-to-bank cross-border transfers, they usually provide hefty fees. So that is stablecoins. I made quite a few videos on stablecoins. What are stablecoins? So I'd encourage you to subscribe to the channel to review those videos. And then the other side of the coin, which is interesting, is tokenization. So bridging the synergies between stablecoins on the one hand and tokenization on the other really makes perfect sense. And this will certainly provide incentive to invest in real world assets tokenization, much more appealing, much more attractive to investors, because it's going to bring in a huge swathe of liquidity into real world assets market. So the tokenized fund, USYC, is the tokenized fund. So let's say if you invest money into a fund and that gets tokenized and make it available on the blockchain, what's the opportunity that will present to investors? Well, they will be able to participate and own units of that tokenized fund, the USYC fund, on the blockchain. In this case, it will be held in Canton network run by Circle. And this over time is going to appreciate, and to be able to earn yield as a result of investing in these units of these tokenized fund assets on the blockchain. That is really the driver for this and makes total sense. As I've said earlier on, the deal with Cumberland DRW would also facilitate liquidity and settlements for USDC, which is a stablecoin, and USYC, which is the tokenized fund from Hashnote. This will actually bring in not only huge swathes of liquidity to the market, but also enticing those institutions to be brought into the network. So I find it very, very interesting to share, because I think this is certainly going to set the stage for bringing other tokenized fund players to the real world assets tokenization. There are also many, many other funds. There are some famous ones from BlackRock, which is the world's largest asset manager, who've actually championed this effort. And this will integrate, like I said, Circle's USYC with USDC, which is the flagship stablecoin, which will enable convertibility between cash and yield-bearing collateral on the blockchains, right? And would certainly unlock the huge potential for the market that is increasingly being driven by institutional adoption, where participants increasingly expect market structures that are common in TradeFi, traditional finance. If I refer back to this other article from the Boston Consulting Group, it makes a mention that the current addressable market for tokenized funds is estimated to be 600 billion by 2030. That is the estimate from Boston Consulting Group. At the moment, it's just achieved the 2 billion assets under management for tokenized funds as of late 2024. So I think this is a major attraction point for blockchain investors who are thinking about participating in this space. So that is tokenized funds and the huge potential. Now let's go on to the second exciting news that I mentioned earlier on, to do with this tokenized solar panel ownership. And of course, it's hitting the actual energy utility giants like the likes of Enel Group, which is the top utility company in Italy. So it's gone on to say that effectively the Italian green energy company Enel Group has entered the tokenization market to launch fractional ownership of solar panels on the Algorand blockchain. Now, this is, again, another example of a real-life problem of helping consumers to bring down the cost of energy bills in their household. And we all know the benefit of solar panels, but what happens if you actually bring that into the tokenization space? As cost of energy is in its all-time high, and of course there's always going to be some pleasures from governments to bring down the energy cost, which is the major inflation inhibitor of these high cost of living. So this is if you convert that as an opportunity for investors, well, by digitizing solar panels on the blockchain, that is going to present a multi-trillion-dollar opportunity. And this announcement from Enel Group merging with Algorand blockchain to tokenize these solar panels and enabling fractional ownership units of these on the blockchain for investors to participate, own and hodl over time. This is inevitably going to bring tremendous maximum rate of return on those investments held on the blockchain. So I think this is yet another example of fractionalization of assets, allowing multiple parties to own smaller portions of an asset on access markets that traditionally require significant investments. You see, this is the appeal of real-world assets tokenization. Not only does it provide fractional ownership of assets, a representation of the blockchain, is very egalitarian in the sense that enables any type of investor from all walks of life to be able to participate. So you can see that it just doesn't stop with the case of solar panels, but also real estate, even arts and collectibles, financial instruments, which I've just touched on earlier on, and also football teams, basketball teams, anything that you can think of that has that monetary value attached. Those are perfect investment opportunities for tokenizing those physical assets onto the blockchain. And that is what real world assets is all about. So hopefully these two great examples will give you the huge potential understanding as to the great investment appeal this would bring to everyone, right? And from all walks of life. So if you enjoyed today's episode, please hit the like button and share the video. And also I'd appreciate if you provide your support by subscribing to this channel, because as I said earlier on, there are several videos to do with real world assets tokenization, Bitcoin, blockchain technology, and the future of finance. So I'll see you next time.